Good morning, everyone. So I'm about 3 minutes early, so I'll wait for everybody to come in and take their seats. And I'll just kind of randomly babble a little bit until people get here. And the first babble I want to make is this one. This was the expected move last Friday to this Friday, 63.92. Expected move boundary. So that was the upside boundary. I didn't put in the downside boundary, which would be around 60-ish, which was in my chop zone. I wasn't um, meticulous about that. But yeah, so that expected move boundary. So what I wanted to point out is here's the 63.90 was kind of the top of the expected move last week. And since you asked that question, let's get to over here. Okay, so as of right now, it's a 25-point expected move ish, and we're at 65. So 40, actually, in one rise, I have the 40 inflection point down here. That's also expected move. I'm not meticulous about how I label things. So here's the expected move boundary on the bottom, expected move boundary on the top. And so this is kind of where we are. Okay. Now that folks haven't filtered in yet. It's only 8:29 and we've covered so much. Good morning. So I'm just going to assume that okay, now it's 8:30. Now I can officially begin. ECB euro little changed following expected rate hold. Okay. So that was one little good morning, Boomer. So that was one little bit of news that kind of wasn't expecting much, and not much happened. ECB held rates steady. We also have employment numbers, unemployment, whatever. Unless there's a big turd in the woodpile, I'm not expecting much. Actually, when I used to work in with this company as a COO, bringing treatment programs into hospitals, psych programs, the guy that was a business development person used to use the term turd in the punch bowl. Let's hope the CEO doesn't throw a turd in the punch bowl. Anyway, I digress. Okay, so here we are, kind of pulling back down into a more normalish zone. So, for my 2 cents, I mean, obviously the headline, short covering, whatever, and also market makers. I'm going to switch gears real fast. Market makers are pretty exposed up here at 6,400. What do I mean by that? And we'll look a little bit more granularly in a minute. There's a lot of customer long dealer short at 6,400. So I'm assuming, and you know what they say about that on the news and the initial spike, there was some hedging that had to be done in the thinner liquidity after hours, and then trading bullshit, people buying and selling dips and all that technical term. And now that that's kind of settled out, Now they might be a little too long, and so now we're kind of settling into where we might be. Let's take a quick look at VIX, and then I'll get on to the other. Okay, so now I mentioned this in my note. VIX is all the way down at 15. All right, 15 point whatever it is, 3.5. And as I mentioned in my note, and this was from Tier 1 Alpha, I kind of took what I needed and I credited it in my note. We're basically at the level we were at the February peak, wherever that was. Where's February? At the February peak. We're basically there, 15. Does that mean that that Chicken Little, the sky is falling? Structurally, we're not the same as where we were before. So the realized volatility is down at 8.5. And so the VRP, volatility risk premium of 8.5, if you add, so 5 is supposedly the typical difference between realized and implied. That gives us a VIX of 13. Not saying we're going to get there, saying that even at VIX 15, based on historic look back, VIX isn't that low. That said, we could be at an inflection point any time. Let me remind you that that McMillan, the OG guru, said that he had realized at 8, whatever, forget the math so much, that if realized gets back up to 10, that would be another warning sign. And for realized to get back to 10, we'd have to have some big moves. They'd probably be to the downside, but not necessarily. So this is just keep that in the back of your mind. Weekly initial claims for jobless benefits, continuous claims plus 4,000. I have no idea if that's good or bad. And I don't really care. I think that's a nothing burger. Okay, so let's get this back to a usable time frame. Let's get this back to candles. Now let's continue with and so a lot of this IMHO, as they say, is flow. A lot of what's been going on is mechanical. I mean, you saw like the IV term structure for Liberation Day and FOMC was meh. Nobody's expecting anything. It's not complacency. It's just suppressed realized volatility, mechanical flows. Overall, gamma is positive, so to speak. And so, and so that's kind of where we are. Until something breaks, the mechanical bid just keeps happening. Yeah, we're overbought and all that, but so what? Okay. So we had the news. We have global services PMI. I don't know if that matters. We'll see. At 9:45, we have new home sales at 10. So head on a swivel. Okay, Honeywell reported earnings. So I'm going to indulge myself because I've got maybe a half position, a little more in Honeywell in my old man account. I have some for my kids. So I think that your crystal ball is as good as mine, but I think that Honeywell is a good longer term core piece of the portfolio, not investment advice. Don't sue me. Well, you can sue me if you want. I'd rather you don't, though. Honeywell. Where's Honeywell? Yep, expected move. Thank you. Which is just the straddle price. Where's my Honeywell? Where'd it go down here? Honeywell. So they had earnings, so looks like they had a gap and crap. All right, so we'll see. Was hoping maybe he had it there. Okay, they don't. All right. And while we're looking though, let's take a peek at Google and Tesla for fun, and then we'll get on to our regularly scheduled program. Oh, and CMG got killed. Okay, so Google kind of up at the top of the range here, 200 round number. I would probably be more inclined to maybe fade this, and we'll look at Gamma Edge later on just to see what their secret sauce says. But I would be inclined, I mean, obviously wait and see. Once the stuff for Friday is hedged out, if Google didn't exceed the expected move, then I'm not saying we fall apart, but I'm saying that this might be it. Now, I haven't done deep work in individual stocks in a long time, at least probably a year, maybe a little less. I've been much more focused on just the index. I used to do a lot more, spend a lot more time on the individual names. I just find that the data I have for the individual names is not as reliable. I don't have as much of an edge. SPX is the most liquid instrument. We know the dealers are going to hedge. We know where they are. The aggregate noise kind of comes in, so I just like it. Okay, so Tesla down near the bottom of its range. I don't remember what the expected move was. I'm going to guess 15-ish, knowing Tesla. Would like to see what happens at 300. I would probably look to sell puts. Okay, that's that. Back to what I imagine most of you are here for. SPX. Okay. Weekly initial. Okay, some more. I'm getting more jobless claims nonsense. Okay, so we're kind of near the bottom of the chop zone, which is good. I'd much rather have a clean trading palette, so to speak, than to be like all the way up here extended. Oh yeah, IBM. I don't have it on my screen. I remember when I looked in the pre-market, I mean the aftermarket yesterday, it didn't look great. Oh, thank you, Bruce. I enjoy doing them. So IBM, I saw in the aftermarket was yesterday was getting kind of beaten up. Oh, Intel coming out later today, whether that matters. Okay, so let's look at some of the main levels I see for today are the 75 pivot, and we'll look at options depth in a minute to see where I get that from. Um, Top of the chop zone is going to be here. The expected move boundary was over here, and that's going to be a moving target. Just keep checking the straddle prices. What's the expected move? Expected move is 24 plus or minus where we are. That's what it is. Since SPX is a little suspect in the pre-market, just kind of but okay. This is probably a more realistic E-mini, 17 points, so 17-ish points from here, 20 points from here. Where's here? Here is 60. So 15 to 20 points, let's call it 20, 40 on the bottom. If we kind of just sort of recede, fade the enthusiasm, 50 round number, I like. And on top, again, 15, 20 points puts us right at that through the pivot and up to the top of the chop. So that's, kind of the numbers I'm looking at, I would be looking at. So now let's take a look at options depth. And we'll look at some of my other toys. Okay. And we were looking at this last night in the stream share, subscriber only, premium chat, whatever it was. Thursday night, Wednesday nights at 7:30. Okay, so this is position number, I think. Yes. So right away we look 2,000, 2,000. So it's not huge positioning locally. I mean, 1,000 matters, but it's not huge. Good morning, Selena. It's not huge. So why is 75 the inflection point? Yep, looks similar to last night, but when I change it to gamma, it'll look a little different. See, we went over this last night. So here's the inflection point. Right now, we're over here somewhere. So right now, we're in this positive gamma. This kind of sort of should hold. However, if IV increases, then these get a little weaker. We won't go into all the Greeky stuff. These get a little weaker, and these can break. Just like if you're short a put and IV increases, you'll be losing money even if you're not there, if it's heading there. Just think of it that way. Got this little inflection here at 45. So this stack is supposed to hold. And let's see how that acts. 50 round number is good. Now, if you remember yesterday, let's go back to here. If you remember yesterday, we kind of chopped around that 45, 50. We chopped around right around where that inflection point is. And then we got what looked to me to be a mechanical bid that pulled us up to 50 and over. Then once we got over 50, it was just charm flows that brought us up. So in a way, I sometimes think of that as fake buying. That's not really what happened. I mean, it happened, but it's not really what happened. What happened was we were struggling near 50. We got over it. Charm and stuff started shifting. Then at 3:30, once we got over that 50 area, we were trapped between 60 market maker long gamma, so we're not going to close there. Big level, and 50 and then 55 on the bottom. So we closed right below it because it was a big level, and so market makers were too short as it was going up. They had to keep buying, buying, buying right till that level, and that's where we ended up. And now we're kind of back to the scene of the crime. Now we're back to the scene of the crime. And so now let's look at what's going on with VIX. Surprisingly, VIX isn't showing us much. So let's watch VIX. I don't know if there's taco news out there, if Trump said, no, maybe we don't have a deal, who knows what. Tesla looking weak. Let's look at the Qs real quick. Qs did the pop and drop too, like everybody else. I don't know how to show if this is up or down from minus 42. Okay, so it's slightly down. Here it is. Slightly down. So I would actually welcome a pullback here into, I mean, not that I get to choose. I'll pull back into this 40-50 area. But what I would welcome doesn't matter. So let's get back to here. Okay. So we want to look for a reaction in this zone to see what happens with this positive gamma over here, supportive stuff. Should we go down? Should this break? We got this inflection over here at 35, and then larger positioning, 1,000, more than 1,000 over here. And so this area I would expect to hold. We got almost 3,000 customer short puts over here at 6,300. So you know me, I'm a premium seller. So selling premium down here would be a nice thing. Up on top, there's probably not much juice up here anymore. A lotto fly around 75 mid might be good while we're down. I might look for something like that, and we'll get to that in a minute. Now, this is position number. Turning it into gamma, position number, we're assuming is more or less fixed. I mean, there's trading around it, but studies show a lot of this stuff stays in there throughout the day. Position number is more or less fixed, especially the larger ones. But the relative hedging impact, the gamma, is going to vary depending on how far we are into the day, time to expiration, and how close we are to this number. So let me broaden this out a little bit at the bottom. 61.70, why not? Doesn't cost me any extra. Now this is gamma. So the relative hedging impact over here is somewhat significant. This is pretty significant up there. Decent inflection point over here. Another one all the way down there. So supportive flows should be coming from here. Ping pong from in here. So think of it as poles of a magnet. And you know how opposites attract and same repel? Think of it as repelling as we get up here, but then attracting as we to here, and then repelling down here. So just try to imagine kind of but then it switches to attracting up here and then repelling as it gets closer to the midpoint of these. I don't know, I'm trying to think of an analogy to help you visualize it. So we have this going down, kind of being supportive. Good question. When bars are stacked together, think of it as a zone and think of it as aggregate hedging that's going to have to be done. So as we pull down into this one, there's more and more pressure for the dealers to buy the dip. So I like seeing stacks. So stacked long is more supportive than one bar, unless it's a big ass bar, technical term. Stacked customer shorts, on the other hand, are fuel up. So if we were here, if then, let's just pretend, and we got over this 85, then this stack would be pulling us up. This stack would be pulling us up pretty much to 6,400. Maybe we would overshoot, maybe we wouldn't, because this would be pushing us back down. So that's that quantuition, my theme, I've a term I've coined. Looking at the quant data, but there's some kind of intuitive pattern recognition thing that goes with it. Quick little backstory on how I came up with it. One day I was talking and I was just talking about the numbers, whatever, and I said intuition. My intuition tells me, or whatever, and somebody derisively said in the comments, intuition. They want hard data, back tested, whatever, which is fine. And so I thought about it, and I'm not going to go into a long psychology lecture on intuition and how it's actually pattern recognition that's somewhat evolutionary stamped in, somewhat the result of learning, think fast, think slow. There's PhD and Nobel Prize winning research about it. So I said, yeah, intuition too. There's a whole bunch of research about competence, conscious, unconscious incompetence. We don't even know what you don't know. Conscious incompetence. We realize, oh shit, I don't really know that much. Conscious competence, there's a whole, it's like a model. Conscious competence, you go, okay, I know this, but I got to think it through. It takes me time, whatever. Then unconscious incompetence, where you just know what you know and you just kind of know. And those are kind of like levels of acquisition of skills or whatever. It's applied. That model is applied to lots of different fields. So anyway, end of psychology lecture. Let's get back to trading. So now let's take a peek over here more broadly. So what do we see here? When we look at this and we see these light colors, there's not really a ton of hedging demand. There's really, now this is the whole complex, not just the zero DT. There's just not a lot. So we're somewhat free to move around the cabin in a generally supportive environment. Generally supportive environment. Did I answer your question, Moisey? Arthur? Please let me know if it did or if it didn't. So if we can get up toward, well, okay, we're here now. So here's kind of a path of least resistance, glide path. You're welcome. That's kind of a path of least resistance, glide path, and where's the time? So if we open up somewhere around here, just the natural hedging should take us in this direction. Doesn't mean that it has to, but that's kind of the drift. And again, the numbers aren't that strong. If we're below here, then we kind of drift in here. And so if at the end of the day, we're kind of up around that 75 inflection point, you go, holy shit, Doc said that in the morning and we hung around 60, 55, 65 all day. How'd that happen? That's how it happened. And then we have that 85 pivoty thing and all those customer longs at 6,400. We got a ton of them for tomorrow. I'm going to show you in a minute. And now, au contraire, we could also drift down here, TA 101, if we just go back to the charts, price action candlestick, like my buddy Bad Hombre likes to do. I like to do candlesticks too. What do our candlesticks show us? Well, we got this over here. If we want to we got this cluster over here. So candlesticks, say 35, 40, somewhere in here, might be where we kind of should go. Oh, wait, maybe we want to say the breakout at 50. Okay, maybe that, depends, potato, depends on how you like to, I've long since abandoned MACD and RSI and all that. I might peek at it once in a blue moon for fun, maybe, whatever. But I'll look at this and I'll look at gamma. Anyway, I digress again, which if you've been watching my stuff for a while, you know that that's par for the course. All right. So now we're going to look at this. I've been using this more and more, and I have to shout out to Ivan, IV2 trader. He's an analyst with Trade with Insight because he was using this a lot, and I just noticed him posting it a lot and talking about it a lot in various chats that we're in together. And I said, that's a really easy way to visualize it. Before I would glance at it once in a while. So what are we looking at here? Market maker positive gamma. Instead of seeing bars, you're just seeing numbers. My brain works good with numbers. That's the quant part. So we're seeing numbers here. So market maker negative gamma 18,000 for Monday. For Friday. Another only 2,000, but still that matters for the end of the month. FOMC is over here. There's nothing over there for FOMC. Not many positions for FOMC. So right now, we're roughly over here. See, isn't that cute? It gives you, it lights up for you. Roughly over here. Oh, that's where we close. My bad. It's not. We're roughly over here. So here's that supportive stack. Gets much more supportive over here, 1,000, 1,000. Not much at 45. That's where we had that little notch. And more over here. So imagine the path of travel. If this holds, not much here, 70, not much to eat through. This will outweigh that. 457 is bigger than 176 last time I checked. So we should eat through that. A little pushing down from here. So if over 75, then 85 we should stall out. So your natural fly looking thing would be 85, 75, 65 or something like that. And we'll look at that in a minute. Hopefully you guys see that. Now, a word about this. A word about these negative, these market maker longs. Just as with positive gamma, if there's positive gamma above, we kind of drift toward it, like we saw yesterday at 60. With market maker negative gamma, that means customers long. Just imagine you own the 6,400 call expiring today. As we go up, your calls, is becoming worth more and more. Yeah, you're a genius. Especially if it's a zero DTE call, has a lot of gamma, change of delta with respect, with movement with spot movement. But then what happens if we go up and we start to stall out just a little bit and pull back a few points? Suddenly your ass goes from green, from really green to a little bit green to red, and the market maker, think of them on the other side. They have to, while you're getting green, they're hedging, they're buying with you. But when you're getting red, they're selling with you. Not literally, but that's an easy way to think of it. Think of it as a trader. That's what happens. They're selling with you, and then if they held on to these 6,400 calls to the end of the day, and we're at 63.95 or 63, it doesn't matter where we are, these things are worth zero. So they're going to be selling, selling, selling. So these things act as an attractant, but also push down as they decay. Same thing with the long puts underneath. If we're heading there, we could head there, but then they decay and they push up. Okay. Now let's look at the chain. Oh, crap. All right. 1 second. I'm not going to type in my password with couple of maybe, I don't know. Hopefully it's a few thousand, probably a few hundred people watching. So let me stop screen share for a second. Okay, back to screen share. Okay, so now let's get to the money shot. All right, so this was crap I did yesterday. Small, as you guys know, if you've been following me, I do it small in this account. Looking good. Only 114%. Haha. Okay, so forgetting what I have, that's a whole nother story. You really shouldn't care. And what you might want to care about is we were talking about this yesterday after the market closed, and some subscribers and I did it actually live, so you could go back and watch it. It's on YouTube. Now we kind of picked the zone based on the way the structure looked today for little five wides, and I couldn't get the five wides I liked over here. They're still working. See that? And sold the calls, but forget what we did. So that stuff that I do with anyway. So where are we now? So let's think back to the chart. So we'd like to be below 6,300. If your credits, well, actually, before we do that, I say I already have an asymmetrical fly over here, which might be interesting to add to. But let's look at a 75 fly. Let's look at something simple at first. Just a simple 75 fly. $45, 55 cents, whatever. For 40 cents, I could be a sport. If I were building it fresh, let's go back to over here. See, there's that 75. That looks good. Or if we can get on our horse, if we take the drift path into account, maybe we might look at a cheapie up here near 85. Now I already have crap here, but just to build one out, see how that might look. 25 cents. That's a real cheapie. Maybe we like 75, something like that, $1.15. You can play with it. Maybe you think that we're having a down goes Fraser day. Down goes Fraser day. Just for fun, let's look at puts. It shouldn't really make a difference. Put call parity, etc., etc. Let's just say we think we're going down to the 60 area. What do we got going on? 60. Remember, that was where we broke out. That was where we closed. Maybe we have a flat day. Maybe you like to do something like that if you want to spend money. Maybe something like this. That's kind of expensive. So maybe you do a 10 by 15 to make it a little cheaper. But now you've got a little extra risk if there's breaks. Or What I might do, now see, it's 10 by 15 like this. That's still a debit. That looks interesting. I'm not sure. I don't know if I want to spend the debit on that, but then what I would do, maybe I actually will do this. And this is one of those don't try this at home kids. I don't want 4. I want 3. An asymmetrical fly, that's a little too aggressive. But if I move this down, move that down, move that down for $1.80 credit, that's looking kind of interesting to me. Move it down just a drop more, 50. I'm going to be a little more aggressive here. I like that. Let's see. That's pretty conservative, actually, I think. I'll do one conservative. I might do one aggressive. This is for science, folks. Okay, let's see what happens. For more normal people that want to sell puts, want to look at iron condor, now let's look at a kind of 10 wide, like a lot of people like to do. I like to do 20 wides. A 10 wide down here, a 20 or 15. You know, a lot of people like to get a buck for a 10 wide. That looks safe. Now, I'm not interested in getting even premium. I'm interested in safety. So on top, I would want to be further away. I don't like a call from here yet. I just don't. I want to see the whites of their eyes before I sell calls. Now, 85 we should stall, so gun to my head. You know, if I really wanted an equal iron condor or whatever, 95, you know, somewhere up here. But I just don't like to be selling market maker long gamma. Market maker short gamma. I just don't like doing that. So I would wait. I might end up there eventually, but I would wait. So we have tariff news and all that kind of stuff. I would wait. And again, gun to my head 2.0. If I were to do it, I would do it something like this, with some kind of asymmetrical fly structure on the top. Okay, now what do I got here? This is what I sold yesterday. Cancel, replace. Okay. If it says 50 cents, it means I got more than a buck. I think I got about $1.15 for it. I'll just let it close out at 50% profit. That's what I do, especially on the overnights. And that's it. Okay, any questions, comments, whatever? If not, you know me. I imagine if you're here. And if not, welcome if this is your first time meeting me, quote unquote. Um, you'll see me on Twitter. I'm in lots of different Discord chats. I got my Substack. I'm all over the place. Oh, one more thing to mention. And this was interesting. I'm just kind of curious for those of you that saw it. I mentioned this the other day. Somebody in our chat room flagged volatility flagged a big trade. A whale sold. This was when we were at 4,300. Oh boy, where can you learn this game? You're new here? I'll show you where you can learn this game. Hold on. I mean, there's tons of material on Substack, but hold on 1 second. Give me 1 second. So you're watching on YouTube. So let me. Well, you can learn it on my Substack. You can learn it on YouTube. You could DM me on Twitter. Let me get you some of my links. So here's my links. Basically, you can learn it from me. Let me. There's my Twitter. Whoops. Well, I'm trying to just copy one thing. All right. Well, you'll find my Twitter somewhere. Here's my Substack. You can reach me there. You're welcome. While I'm putting stuff in here, okay, I'm running out of time and I got to do somebody a favor. Alma asked me to she's on vacation, she's a quant, and kind of asked me to help babysit her room a little bit while she's gone. So I'm just going to have to dip in there once in a while. Not babysit, put some charts up and just kind of whatever. Okay, I do have a minute, so let's put this stuff in here while we're at it. Affiliate links, Mentor Q. I'm still waiting for Gamma Edge to send me their link. Options depth, which is what we were looking at most of the time. Options depth. All right, I think that's it. Let me see if I have any other stuff to throw in there. I'll just throw in my Twitter link in case it's not readily handy. Okay, have a great day, everyone. There's my Twitter. I think that's my Twitter, right? Looks like my Twitter. Why is it showing a YouTube thing? Okay, let's do this. I don't know why it's showing YouTube. I don't know. It's above me. Anyway, take care, everybody. My guys, I'll see you in the trading room. I got to put some charts up and help Alma out. I'm grateful I have good relations with a lot of other people that have services and whatever. It's a community. We all work together or try to so that us retail people can have a little bit of an edge. Okay, thanks everybody. Take care.